Now let's put things in perspective. So first is the manager's primary goal is to maximize shareholder value, right? And well, there's no other basis in order to know about the if the cash flows, the likelihood of the cash flows to increase, or how the investor estimate the future cash flows. These two questions are to be answered by studying the financial statements that are provided by the publicly traded firms. Okay, so for the for example, if you want to get some publications out of that, you can get it from the SEC website of the America, the US, and also you can study it here from the Yahoo Finance example for intercorporations. You can see some key points or key figures in here, like example, like their biddings uh, for the day, like that, for the last 2 weeks, for the last week, and the market price capitalization is a billion, and their meta for the 5 months is 1, so there's no risk only for that because the meta is 1. And the PE ratio, price earnings, the price versus the earnings is 105, so that's really high, right? Okay, it's meant to say the price is 105 times over the earnings. And you can see the other financial statements. You can click that one and it will give you the summary of the financial statements. For instance, with the this one is for the income statement for the last 4 years, and you can compare if the Intel is doing good, and it looks like they're not doing good, right? And yeah, the cost is dropping, the sales is dropping, and the bottom line, if we try to look into the net income, sorry, the net income is from continuing here is it's not shown. Yeah, here. Uh, Net income per common stockholders is here like that. So it's dropping, really, it's dropping. And for the total net income before that, the net operating income is really dropping. Okay, so it's bad. So they're not in good condition now, the Intel. So what we're going to do, so this is one of the sources. Okay, so that's why there's a need for the reading of the financial statements. So because the accounting actual information is the basic communication that is of information. So the knowledge of that should be earned by the stock analyst. That's the beginning point where to analyze the about the firms, and that's where the basis to keep the score. So it means to say how high is the score, how low is the score. They are going to look at that to the financial statements, and yeah, and if they don't know how to do that, they are blinded with what decisions to make if they don't. So just like with the other managers, the corporation, like the marketing, human resources, production, if they decide something without considering the financial statements, so they don't know about the impact of that in the financial statements, then they don't know if they're making right decisions. Why? Because it's very important to know what's the impact of my decision to the financial statements of the company. Okay, it's good or bad. So it's the financial managers who can tell about that. Okay, so when we are going to finish this chapter, we are going to list the key financial statements, what kinds of information we can get that they provide to the corporate managers and investors, and also what they mean by free cash flow. What's that? What's the impact of that of the firm value? And we're going to discuss about the features of federal income tax system, how it impacts with the what do you call this one on the bottom line, okay, or the net income.